Welcome back everyone, this is a brief update on the gold market. Since Monday's opening, which marked an almost 2 months high for gold's prices, it was all the way downhill from there on with very few exceptions. Some of gold's main drivers in the last 7 days are to be examined in this report, along with some remarks from our team about its latest trading activity. Also, a brief overview of potential market moving events for the coming week is to be included at the end of the report, providing the opportunity for gold traders to be aware of risks and/or opportunities the markets may have in store for the coming few days. The outbreak and the spreading of the new coronavirus in China as well as globally remained as one of the main drivers of gold's prices for the past week. Despite some fluctuations, concerns about the new coronavirus persisted and intensified worries in the markets, hence pushing gold's prices higher mid of last week. Investors fled to the relative safety of the precious metal as the spreading of the disease was becoming worse and the death toll rose. It should be noted that in the past week, China has intensified further its efforts to set the coronavirus under control and also increased measures to stabilize the economy after the end of the prolonged holiday period in the country for the new lunar year on Monday. Please bear in mind that the World Health Organization declared the new coronavirus a public health emergency. US and Japan issued warnings against traveling to China. We expect that the outbreak of the new coronavirus will continue to affect the markets based primarily on two axes. The first will have to do with the possible slowdown of the Chinese economy as such and side effects which cooperating economies may present, while the second axis could regard the possible widening of the disruption regarding global trade, travel restrictions, etc. Also, we consider the current time frame as a bit premature for any guesses on how wide-ranging the issue could be for the global economy. We expect headlines to continue to emerge about the coronavirus affecting gold's prices and possibly underpinning demand for the precious metal, depending on whether the news ease or intensify worries. Yet, the relative weighting of the issue may lessen somewhat. Should there be fundamentally positive headlines, we could see gold's prices deflating. Another driver of gold's prices in the past few days has been the strengthening or weakening of the US dollar and the events which affected its direction, starting with the Fed's interest rate decision, which decided to remain on hold, as was expected. The event as such seemed to have a slightly positive effect on the precious metals prices. Nevertheless, it's worth mentioning that the bank implied that it may continue to maintain the current level of rates, even should inflation rise above the bank's target of plus 2% year-on-year. On the flip side, though, and since Monday's opening, a constant strengthening of the USD seemed to weigh on the prices of gold, especially the release of a stellar ISM manufacturing PMI for January, which outperformed market expectations, delivering a short-lived hit on gold's prices upon release. The data renewed hopes for a recovery of the US manufacturing sector, practically strengthening the greenback and at the same time weakening gold's prices. We expect that the direction for the USD could continue to affect gold's prices in the next days as a number of important financial releases are due out in that period. Specifically, in the next 7 days, as for financial releases, we tend to single out the US employment report for January on Friday. Should the report show the picture of a tightening US labor market, we could see the USD strengthening further, possibly on the expense of gold's prices. Please bear in mind that should you plan to trade on the particular event, extraordinary volatility upon the release could be present. Other than that, we would also like to point towards the release of the ISM non-manufacturing PMI for January, especially after the upheaval created by its sister indicator mentioned before. Moving on to the technical analysis, this is goals for our chart. We can note that despite rising substantially over the past few days, gold's prices reached the peak for the past 7 days on Monday, reaching a new high since the 8th of January and rolled down since then, breaking the 1,585 support line, now turned to resistance, and continued lower to test the S1 1565 support line without breaking it. We tend to maintain our bullish bias for the precious metals prices, and for our bias to change in favor of a sideways movement initially, we would require a clear breaking of the upward trend line incepted since the 14th of January. Please note that gold's prices are testing the pre-mentioned upward trend line as we speak. Hence, gold's prices may be in a make or break situation currently, technically speaking. Should the bulls maintain control over gold, we could see its price action breaking the 1585 resistance line, aiming for the 1605 resistance level. Should that be broken also, we could see gold's prices aiming for R3 1620. On the flip side, should the bears take over, we could see gold's prices initially breaking the upward trend line mentioned before. On second note, we could see gold's prices breaking the S1 1565, aiming for the S2 1547 support level. Should S2 be broken as well, we could be seeing gold's prices aiming for the 1530 support barrier. We hope you found this report useful for your trading. That's the main point of the report anyway. From all of us here at IronFX, best wishes for solid trading.